Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 15th of August. Starting off with the FTSE, which is back within that rising trend channel from last September. The floor of the channel there, 8240. Above that, we're looking for 8400, basically retesting the late July resistance, and I suppose the record levels towards 8470, up just above that. Big picture target here, which seems unlikely at this time of the year, maybe by the end of September. The current rate of progress would be up to 87.40 and the top of the channel. Otherwise, on the downside, we've got the 50-day line there just below 8200 and the old support line projection from May 8060. But at the moment, really relying on this market staying above at least the 50-day moving average, and ideally within that channel, and staying above 8250. Next up is the DAX, and here recovery continuing after the double gap down that we had the start of the month. In fact, we've had a gap higher today, so that gives us a bear trap island reversal, suggesting that we can actually go back up to the highs towards 18,600 and basically look at the price action of the candles of the week so far, especially on Monday. That was a very strong candle there, a hammer candle, and ideally we fill the gap up to 18,000 today, tomorrow, and then hopefully by the end of the month up to the best levels. This stage only back below 17,800 and that old support line projection from back in April, really delaying the upside scenario, not expecting anything lower, whatever happens, than the 200-day moving average at 17,500. The Dow is next, and here making good progress above a rising 50-day line there. That's around 39,500. Above that, so clearly looking for the best levels ever through 41,000, and maybe over the next 2 to 4 weeks, even hitting the top of that rising trend channel from back in this time last year, 42,500. Worst on the downside now seen as being the floor of that channel there, 38,700. Moving on to Bitcoin, which has rehabilitated itself of late, but failing at the 50 and 200-day moving averages around 62,000, and now we still have the risk of a retest of the 52,000 area, which is basically that February support line projection. Hopefully that would be the third and final test of the low 50,000s. Problem is we've had a double failure now at RSI 50, that tends to be a leading indicator on the downside, and that would only really be snapped by an end-of-day close through 62,000. Gold is next, and this has been the star of the show here, at least until now. Old resistance there at 2450. Above that, still looking for 2600, or even more than that by the end of this month. If you're cautious, I suppose you'd now wait for a proper end-of-day closes above the $2,500 level before assuming 2600 plus is on its way. There is a rug pull, which there could be after the double top that we've got here above 2500. Not expecting anything lower now than 2400, and the 50-day moving average, which is also the floor of that rising trend channel from December. Moving along to the stocks, and the first one is Artemis. Here we finally got our turnaround with the gold high-grade news, and here also in terms of the technicals, bear trap island reversal, so gapping down at the end of last month and then gapping up today. Looking for a minimum of the top of that falling trend channel from this time last year as high as 1.1 pence. Ideally, there's now a return to the 1.5 pence plus area, which was the peak for the end of last year and the start of this year. Ideally, there's no end of day close now back below the 50-day line, 0.6 pence. Cordel is next, or Cordel, and here you can see that we've had they had the spike yesterday and got rising 50 and 200-day moving averages, broken all the recent resistance, the last one around 5.25 pence, and above that, looking not only for the top of this rising trend channel at 6.25 pence, but perhaps even up to the old 2023 resistance line projection as high as 8.5 pence by the end of next month. But obviously that is the best case scenario. It may just be that we had a one day yesterday. Intriguing chart from Distil, and you'll see why here we gapped down to start the week, and then we've gapped up today, so it's a bear trap island reversal, but just on single days. So an intriguing pattern, as I said. Also, we've got bullish divergence, so a much lower low yesterday, but the RSI basically stayed the same around the 5 out of 100 level. Looking for the shares to at least head back to the top of that falling pattern, that falling channel there around 0.48, while they're above the floor of the gap there at 0.27. Next up is stock which I don't look at very much, and don't think anybody else does either, Gelion or Gelion. And here we've had the moving average cross, and then we've had second gap higher in the recent past. The first one was, in fact, the third gap higher. First one was May, then June, and then today. And that suggests that there's a bit of strength here underlying the recovery, and that we should at least head up to 33 pence and the top of that rising trend channel base that's been in place since this time last year. Ideally, we stay above the 200-day line, 21 pence in the interim. Moving on to a stock which I've been looking at quite carefully over the recent past. The idea here was with intelligent ultrasound is that we've broken a trend line there, the red one. We've had to retest that as new support, but above that now at 9.8 pence, looking for the shares to head to the top of that broadening triangle from this time last year as high as 16 pence by the end of next month. We've also got the 50 and 200-day lines rising, probably about a week away from a golden cross, and that also gives us added faith in the upside argument, as does the gap close that we've got today as well for the shares. Kazera is next with decent news, and here we can see, if I type in the right stock, that the shares have managed to gap up above the 200-day moving average, top of the channel there at 0.8 pence or 0.81, which is what we've been looking for even before today's news, and ideally we stay above the floor of the gap there, 0.55 in the interim. The more end of day closes we get above June resistance at 0.6, the better and the more confident we feel there. Returning to Mosman, which had a bit of a pullback, but still remains within the rising trend channel there from back in March. In fact, we bounced above the floor of the channel, which is a positive. We also managed to bounce just below the rising 50-day line, and the fact that it's rising, hopefully we'll get an end-of-day close well above it today at 0.53, suggests that the recent rally is still on course. If you are cautious, you might wait for a break of that resistance line there at 0.66, but obviously that would be giving away quite a lot of the upside, which is still regarded as being up towards 0.1 pence. The only thing which would upset us now really is an end-of-day close back below 0.5 and the price channel floor. Mindflair is next, and an intriguing pattern here in the sense that we're in this triangle, which is actually a continuation pattern, continuation on the upside, and looking for this was basically effectively a mid-move consolidation after the spike that we had in July, and so expecting the shares to break out, maybe not today because we've already failed that triangle top there around 1.2 pence, but an end of day close above 1.2 could take the shares up to 2 pence. Ideally that breakout happens by the end of this month. Only well below the 50-day line, currently at 0.82, really questioning the recovery argument, and ideally we stay above with the 1 pence area and then uptrend line from last month. Novacyt is next, and there were suspicions that the shares were ready to head higher, hence the coverage a couple of days ago, and you can see that we've had our second gap to the upside now, so feeling quite chipper about that. We already noted that the 200-day line was rising after the initial gap higher, and above that at 53 pence, we're now looking for a retest of the highs, 70 to 80 pence, ideally by the end of this month. Next up is Orcadian, which seems to be battling on in terms of its licenses, etc. Another stock that's gapped up through a resistance line, in this case one from back in October at just under 10 pence, and an end-of-day close above that, and we're looking for the shares to hit 20 pence, and the top of that broadening triangle from December by the end of next month. Also positive is the way that the ahead of today's gap higher, there's a rising 50-day line, and in fact, with the gap higher today, we've got a bear trap high and reversal, which tends to be a very strong signal because we had a gap down at the beginning of the month. Finishing off with surface transforms, and here the picture one of a rising trend channel base. We've got a rising 50-day line there as well, which gives us more confidence that something good will happen here. Top of the channel there at 2.7 pence. We're looking for that by the end of next month. If you're cautious, obviously you'd wait for an end of day close through the initial August resistance at 1 3/4 pence, but we have bounced off neutral 50 in the RSI window multiple times, so maybe that's a good enough leading indicator for brave bulls. That's it for me today. More updates tomorrow.